What's going on, guys? Welcome back to the channel. Hopefully you guys are all doing well. I do think there are some small to mid caps right now that are showing some signs of life while this market continues to melt up, and I want to go over a few of these charts here. But before I get into that, I do want to go over a conversation that I did see in regards to somebody from Goldman Sachs speaking about how there's life coming back into the small mid caps across the board. And then I want to get into 2 or 3 different charts, specifically looking at different setups that do look promising at this very time. If you guys haven't yet, of course, smash the like button, guys. Sit back, relax, and enjoy the video. Here we go.
Some signs of life this month, but can that show of strength continue? Let's bring in Greg Tuorto. He's head of U.S. small and mid-cap team at Goldman Sachs Asset Management. Joins us here at Post 9. Greg, it's good to see you. Thanks for
having me, Carl.
We're back to that discussion about how the index is problematic, but you guys still think there are opportunities within it, right?
We do, and I think that we're starting to see some signs of life in the small cap market, as you mentioned. It's been a good month to date for small versus large. We think that's a reflection of a number of things. There's some catalysts in the stocks, but they are extraordinarily cheap, and the underlying economic environment is quite good. And I think as we set our sights on the Fed cutting rates in the back half of the year, you have a couple of tailwinds. So
I was going to say big themed thematics. Economic activity, right? You mentioned the Fed, and then M&A universe broadening out. Does that help?
It helps out a lot, and I think it's been very quiet this year, a lot more quiet than we would have expected. You've heard from all the bank CEOs, including ours, who was on TV with you guys. Thank you. That M&A is big, backlogs are building. We expect that to kind of be materialized in the second half of the year. Private equity will start to move, and then we'll start to see more strategics. We've had a couple of strategic deals this week, but not as many as we expect.
Right. So within, you talk about catalysts, within the area, is it consumer first, financials first, something else?
I think consumer has been the kind of what has carried us to this point. The consumer came into the year as being a big question mark. Would they continue to spend? Where would they spend? And you even heard this week that they're starting to spend on air travel again. So I think you have to start to see a handoff to some other sectors. We're pretty encouraged about tech, software, semiconductors would be an area that I think can take a nice handoff. But also aerospace and defense has done quite well, and we expect to see some more IPO activity in that space because space is quite active. The private side of the space sector is quite active right now.
Yeah, even the big guys, GE today talked about getting that defense business going. We had leisure hospitality ETF hit an all-time high today. Individual names, I'm looking. There's some consumer restaurant stuff you like.
Yes.
Yeah. Cake.
Cheesecake Factory we like a lot. It's become a Gen Z hotspot. Want my youngest daughter to get a second job there. But I do think that there's some really good trends for traffic that will go on for Cheesecake throughout the summer.
Piper is a good one. What explains that?
Piper will be an M&A story, along with just the general capital markets recovery, along with a pretty solid underlying municipal bond business.
Voyager. I don't know too much about that one.
It's a recent IPO, very heavily on the space side. So you think about like as the space market starts to broaden out post, after SpaceX, they do a lot on launch vehicles and other things in space.
Do you worry about funding costs? I mean, at least for the time being, if the Fed does stay more patient than we think it's going to?
They've been high for so long that most of our companies have had to adjust. So I think that maybe there could be some companies at the index level that could have some problems. But for the companies that we own, we think that they're in really good shape. Rates have been high for almost 3 years, so it's you think you get used to it after a while.
Right. There's also the added notion that as trade gets limited by tariffs and just overall tensions, that you want more pure plays domestically. That makes some sense, doesn't it?
That's a great tagline for small caps, and we love it because we do think the domesticity of the asset class, and having been through this tariff challenge before, many of these companies are really focused on the U.S. market. It costs a lot to go overseas. It costs even more to source overseas if you think about the challenges of 2017, 2018, the first tariff challenge, and then COVID. A lot of these guys really tightened up their supply chains, so we think that they are very focused on the domestic market.
Goldman had a great chart today looking at prime net exposure to semis versus software. We've talked a lot about how hardware has sort of stolen that mantle from some elements of software, but how does that play into a smaller mid-cap story?
I think we don't get the buzz from the biggest semiconductors that we all know drive the market, but there are a lot of these picks and shovels that are out there that really can help the connectivity, connecting these data centers together. We like a company called SiTime that does that. And there's a number of other companies that are kind of really broadening out some of the connectivity between the different sort of AI hubs inside a data center. You have to connect these things together to get the best use out of the different compute loads that you're putting on them. So there's a lot of picks and shovel semis that are out there in the small cap market that are benefiting from what's happening in the biggest companies.
Right. Do tariffs play in that? I mean, in terms of the raw material importing, PPI intermediate goods this week was a little warm.
Yeah. I don't think so, because I think so many of these companies have had to shift. If you think about like how we went through, kind of even with the prior administration, a real big change in how we thought about sourcing semiconductors. So many of these guys have had to make alternative plans. That's been more than a year. So I think you had things right. You could worry about the future. Maybe it could cap a couple of points of growth down the line if things get worse. But for now, I think things are in pretty good shape.
All right, guys. So listening to all that, I want to start keeping an eye on these small to mid caps that have, had some absolutely amazing days and some amazing weeks. But if they're on the brink of seeing some sort of a blow off the top type move here, not necessarily pushing all-time highs, as we can see from some of these names here, but definitely giving us an idea of what to look out for. Let's start here with Reddit. Okay, Reddit to me does look decent here, pulling back on the weekly, holding well above that 9 EMA, has what I would describe as a reversal candle here. We have seen something like this just a few weeks back on June 9th, that Monday week, before ultimately seeing this name have a significant push up from the following Monday all the way to from following Monday opening at roughly 121, pushing all the way to a 35% increase of 164. We're pulling back down towards 9 EMA again. Very similar setup here as we look to potentially see some life coming into these small and mid cap names. Again, AMC in the same boat. Over the past 2 weeks here, we've seen a lot of inflows here. We've seen a 21% move here at the peak, 22% over the last 2 weeks. If we can't see a significant move back over this 359 level here, the last time we saw a weekly candle close over 359 for AMC was all the way back in January 2025. And but last time we broke over that, we did see a significant move with AMC, where at one point in time, that weekly candle did see an increase of over 308%, and that is within a week of the same week, of breaking over that 350 level here. So there is a significant difference between trading below this key level of resistance here and breaking above it. If AMC does break over that 360, 359, 360 range there and get a weekly candle close, we could see anything within that $5, $6, even $7, $10 range there. And then last but not least, guys, we do have Unity as well. That has been on an absolute surge here. Over the past 4 weeks, we have seen Unity push up roughly 60% here at the peak, 70%. And this is just coming back from that June 23rd weekend kickoff. If we do see another level of resistance broken here, roughly that $41 to $42 range here, we could see that Unity could be pushing back up towards roughly, and I'm going to give you guys a general idea here of how high this thing can go, roughly move between 50 and 67 if things do start to get wild here. Now, in my personal opinion here, somewhere along that $50 to $55 range there will be a key level of resistance. And you can see here, this has been a key level of resistance here over the past few years. This is going all the way back here to May 2022. This has not been an easy area. I'm going to bring all the way down here towards that 47. Actually, let me just keep it at 49 to 50. This has not been an easy area for Unity to break through, but I do think that there is an opportunity here for at least another pushback up here to retest it before ultimately making a decision whether it's going to be, a piercing through candle there or get a key level of resistance and see it move back down towards that $29, $30 range there. But between those three names, guys, and small to mid caps looking good, here are a few different charts you guys keep an eye on as we go in towards next week. All right, guys, earnings season's around the corner. Keep an eye for that as well. If you have not yet, guys, smash the like button, engage the video. I'll catch you guys in the next one. Much love. Deuces.